Okay, joining us now is Crescat Capital's Tavi Costa, where we do a little after hours. Tavi, we were talking earlier and we found out that you're a little bit of a tennis star. Why don't you tell us about that?
I don't know if a tennis star, but appreciate that. It's actually an interesting story. I started playing tennis when I was kind of late, actually. 14 years old is kind of late for tennis, but
Oh, for sure. That is
um,
really late to learn to pick up tennis. Most of those people that end up being kind of superstars like you, they started at like 8 and 5, right?
that most of the guys I used to play with or started very young. But yeah, it was an interesting time for me because it was a kind of a hobby at the beginning, but obviously it got really serious, and it got to a point that I didn't know exactly. You're kind of young. You don't know if you're going to go to if you go to college or try to play professional or whatever. And obviously I actually never thought that well, later on speaking, it's a lot easier to say that, but I never thought that I really had a shot to be a real professional. And one day I was playing a tournament, and I had a person recruiting me to play at Liberty University in Virginia. And it was for being a Brazilian, it's very expensive to come to America. I didn't come from a wealthy family, financially speaking, and so that was really great. I came here pretty much on a full ride, and moved to Virginia and start playing tennis for Liberty University, which was quite the challenge, given that I didn't speak a word of English, and
Wow. You
just yeah,
you
it
came you
was really
came
bad.
to university without speaking a word of English.
Oh gosh, I mean, I have so many great stories of how of things that I've said or things that I've tried to do, or
You
it's
know
been
what
a
though?
mess.
You
Okay,
know
now
what?
you got to tell us one.
English is 1 second. I just have to say something. English is Patrick and I our first language, and yet we still have those same stories.
Oh, I don't know if you
We
do. I
we
mean,
struggle.
let me ask you a question. Have you tried to buy a soap for just a body soap, or and instead of that you bought a dishwash soap, and that those are the kind of things I've done in the past. And or there was a story that I said to a cop once. I parked my car. This is a funny story. I'm not sure if I was
No, no,
parking
you
my
gotta
car
tell it now. You
somewhere.
gotta tell it now. Yep.
Yeah, it's a funny story. I
Yeah.
was parking my car on campus one time back in the days, and somebody I just got somebody else's cars, and then after I parked, I went to my apartment, and then I just hear somebody knocking on the door. It was a cop, and I was like, oh my gosh, what do I do? I don't know what I did. And the cop was, I could kind of understand him at the time. It was like my second week in the U.S., and he was telling me that I couldn't park where I parked, and that I was supposed to get a ticket. And if you're learning English, you know that the difference between saying a sheet of paper and shit. So he told me that I had to sign this sheet, and then I came back to him and I said I have to sign this shit, and then he looked at me. He was like, "What?" And I almost got arrested for that one. It was very close, and until my roommate came up and started talking to the cop and started
Uh,
saying that it wasn't necessarily what I said, what I meant, and it was really bad. And I mean,
that
I've had many stories like this.
that's really brave. I'll tell one quick story. I have a friend that moved to China in the '90s, and China is or Mandarin is a guttural language in terms of like the way you pronounce things matters in terms of how it'll change the meaning of the word. And I remember him telling me one time he thought he was ordering like this buffet full of like fried chicken or something, and it ended up being that he got a huge buffet of fried scorpion. And I said, scorpion. And I'm like, holy shit, what did you do? And he says, well, first of all, you have to eat it because it's like saving face is really important. And then he said, it's further proof that you can deep fry almost anything and it tastes good.
Yeah.
Okay, so let's talk a little markets here, Tavi, because I know you
Yeah.
guys are big Canadian real estate bears.
Mm.
I don't disagree with you that we're long due and overdue for a correction. What is your thinking here? Why don't you talk us through your strategy, your thoughts, and tell us how bad you think it's going to be?
Well, everything started with, once we kind of had a strong view on China, then we started looking at, remember, accumulating the numbers of of China's current account throughout history, and realizing there was kind of a distortion of way too much money that they had in dollars that they had accumulated, but that wasn't really translated on the foreign reserves, and there was kind of a gap there. And kind of that was what they used to call the twin surplus of the capital and current account being positive at the time. And for us, that kind of meant to be a more of a we thought that's kind of it's really impossible if you think about the balance of payments. They should balance and not have those two. And there was some illicit capital outflows happening, and that's when we really start looking at Australian and housing and Australian and Canadian housing markets, because we thought that the capital outflows are kind of exacerbating those the prices of real estate in those places. And that was really the start. And then we began to look at the more in depth of especially Canada of the household situation and how much leverage they have, and looking back versus comparing that with 2008 and 2007, right before the housing bubble here in the US, and just the price to rent. There's one way anybody can do this, is just take all the numbers provided by I think it's the IMF or the BIS, I don't remember right now, that provided what they call the Housing Watch, I believe it's called. And they provide lots of indicators like price to rent, price to income ratio, and some other things like credit that is related to like mortgage outstanding and so forth. And you can kind of see that if you create a model just kind of ranking all those things, you can see that Canada is by far it is by far the worst. And unfortunately it doesn't have Hong Kong and China there. Otherwise it would be somewhere at the top as well, if not at the top. But that was kind of the beginning. The second part of it too was looking at the labor markets in Canada, look kind of similar to the U.S. being at all-time lows, and or in the U.S. not at the case all-time lows, but in Canada is definitely one part of it. And when you look at that and you see what the corporations, we put out this research looking at the free cash flow of non-financial companies in Canada, realized that for the last 12 months, Canadian non-financial public companies in Canada have actually about 82% of those companies have lost money on free cash flow basis. So when you put that together, how do you sustain low unemployment rate and the consumer being highly leveraged as well? So and then who's holding the bag? And then we start looking at Canadian banks, obviously, because that's usually where it starts to see the problem. And Canadian banks valuations, at least when they were at the top until 2018, some of them are after their highs already, or all of them are, but some of them peaked in the beginning, others in the middle, others in the end of 2018. And when you start looking at those, valuations actually look a lot very similar to the U.S. banks in 2007, 6, and even right at the peak of the bubble. So it made a lot of sense to us to be short Canadian banks, even though they pay a lot of dividends, and it's a little bit expensive to be short them. But we're looking at a big move. We're looking at a 30-40% move down on Canadian banks, and if you're looking at moves like that, then it makes sense to be short, even though they're kind of have a cost of carry here. But so that's kind of the I would say one way to tell the story in Canada. But Australia is very similar story too.
Yeah.
All right.
Patrick, I'm going to interrupt
Yeah.
here just because I love this part of Tavi's position. The one thing I will say that I'm doing this trade, and I'm doing it with I'm short the Canadian banks and I'm long the U.S. banks. If you go look, I think a lot of people don't realize it, but if I said to you, what do you think that the average tax rate would be on a U.S. bank for the past couple of decades?
Oh
It, you
gosh, I
know,
have no idea.
Yeah, and most people think, oh well, you know what, it must be fairly low because it's the U.S., it's a low tax state and stuff. But the reality is that it's actually significantly higher than what
Mm,
Canadian banks have been. So let me get you the numbers. I'll just because I think you might find this interesting. So
mm,
I did a study and I looked at the banks. I used the KBW U.S. Bank Index and I looked at it from 2000 to 2017, and I
mhm.
saw that the observation, too many beers, that's what's happening there, was 31.3%. That was what was the average tax rate or the median tax rate of those U.S. banks. Then
Mhm.
in Canada, I looked at it and I said the same period it was 22%.
Mhm.
And this is being flipped on its head with Trump's tax cuts. So now
Yeah.
all of a sudden the US is on equal footing. The Canada has got an overextended consumer. It's got an overextended banks. And I'm just like, to me, it's one of the it's a theme that I love in terms of you should be buying American banks and selling Canadian banks. Canadians, for some reason, even though we're an oligopoly and we get overcharged by banks, every single Canadian loves their bank stocks. It's crazy.
Yeah,
Yeah.
it's so Kev, when you're doing this trade, are you able to more or less create an offset on the dividends? Are you getting something similar on the banks you're choosing in the
Well, let's
U.S.
go have a look
from?
here. Like, so I unfortunately, like a fool, chose KRE to be long because I thought that the
Oh, poor
small.
thing.
Yeah, I know. So I was kind of an idiot. But let's just look XLF, right? Like that's a cleaner one. So
Mm.
XLF has got a dividend yield of, let's just look here, of 2%.
Yeah,
And let's look at the Canadians and just take an equal weight Canadian one. And that is trading at 3.5. So there's no doubt about it.
yeah.
The Canadian, there's
You
still
got
negative
negative carry.
carry. But I still look at those and the other thing about it is, although we're talking about the tax rates, it's not like you're paying more for the U.S. banks on a price to book basis. It's actually much cheaper. And it has
Mhm.
to do with the fact that it's Canadian banks have done so much better for the last, couple of decades, and they've just printed money. But if what you even if you're just half right, Tavi, then I
Mhm.
gotta think that these two spreads will they'll converge much more so.
Yeah, no, absolutely. There's another part too. It's the credit markets in Canada look even worse. You think the U.S. looks bad at being at close to 55 to 60%. It varies on a daily basis on the amount of inversions in the credit markets in the U.S. But Canada actually takes another 10 percentage points higher than that. it's it looks extremely bearish right now in the credit markets in Canada. So I think that obviously being financials being in a cyclical bucket here, if there is a downturn economically in Canada, I think that obviously the Canadian banks will be in a very tough position. So will Australian banks too. But yeah, for me, I don't disagree with you. It's just for me the only problem is if I do believe that how does that? Let me ask you a question, I guess. So how does that play out if you're a bear, if you have a negative outlook for U.S. stocks, how does that play out being long banks in general
Yeah.
here in the
So
U.S.?
yeah, I guess that's where we're differ because you're obviously much more bearish on U.S. stocks
Hmm.
than I am,
I, w-
and that's
I was gonna make that comment, right? Because Tavi, me and you are quite bearish in terms of where we are in the position in the market. Kev's far more bullish. He thinks that the market's about to like melt up in his little narrative, but
Yeah.
and so like the idea of being long U.S. banks
Mm.
is a little bit trickier when you start building a narrative where you think U.S. equities are going to correct lower in that. But what I wanted to do is just change a topic a little bit, if you don't mind me going off topic
No.
from this thing. But I want to go back to interest rates because I mean, yeah, you did show the inversion of the curves and you talked about real yields and so on. But I don't know whether I got a sense of where you're positioned on interest rate trends and bonds in general. Because me and Kev have this big debate. Obviously, I'm still a bit of a bond bull, and he's quite the bond bear, and so we're completely on opposite spectrums of this. But I agree with almost everything that you said. I'm bearish to equity markets, long precious metals. I'm bearish on China, like bearish Canadian housing. Like so far, you've impressed me. Like you're right in line with everything that I think. But where are you on this bond picture?
Yeah, so that's a tricky question. So we think that the 2-year yields are likely to drop much further, but there's a difference between, in my view, of that's more of a move that I'm expecting to see. However, it's hard to implement that trade, in my view, in a big way, especially like you have so much capital you can invest, and I don't see a big trade here that I can make a lot of money by shorting two-year yields. And so what we do here, we're actually kind of agnostic in terms of that. I mean, in terms of, I'm not agnostic, but I guess we're not taking a position in that way. What we're doing is actually we're being long treasuries in a 10-year yield, but being short the German bonds. So if you looked at the spread between those two yields, they tend to converge as you get late in the business cycle, and it's obviously caused by the divergence of monetary policies between the two countries, or the ECB and the Fed. And you can see that relationship as well. I put out a chart a while ago of looking at the Euribor versus LIBOR as well. And if you look at those spreads, you can see, I mean, they reached a very extreme level, and it's been kind of breaking down recently. And one way you can see that, you said you like the 5-year real yields. You can see this relationship on the 5-year yields and is spread between German bonds and treasuries. It's pretty interesting that
Is
the 5-year yields is already kind of, the spread and 5-year yields is already kind of leading the way, and the 10-year yield spreads is actually forming this kind of a head and shoulders pattern. It's breaking down from a head and shoulders pattern, and it looks really bearish for us that rate, the spread is likely to converge as we see the economic conditions deteriorating here. But
so
one second, Patrick.
Kev,
I got to jump in 1 second.
Uh,
Tavi, you realize that you guys are advocating the trade that knocked out the original bond king.
thank you. I was about to say that. That's the Bill Gross.
That's the Bill Gross
Slayer.
trade. Yeah, no, absolutely right. But Tavi is right that in this latest move, this latest reach for duration, U.S. bonds have outperformed basically the rest of the world. And so even though the boons have been continuing to go even more negative, the reality is that the U.S. 10-year has done even better. So that spread trade has actually worked, and Bill Gross might have top ticked that spread. So. When he wasn't busy filling his house with fart spray.
Well, we kind of joke at that as well here at the office, that that was kind of I said, I think in one of the tweets I did, I said the Bill Gross trade is back or whatever. But yeah, and the other way you can see that is when you look at that divergence of 30-year yields across the globe versus either the Fed funds rate or LIBOR rates, and you see the spreads kind of turning negative in a big way. In other words, inverting versus 30-year yields across the globe. It's what that tells you as well is maybe U.S. rates are a little bit too high relative to the rest of the world, and that's just one way to do it, and that's kind of how we find a easier to play this. But it's the part of for me that is hard to take a long position on treasuries is I kind of believe on the bear theory too of treasuries, of what's happening with the U.S., of the amount of leverage in the government and households and corporates and so forth. And I think that eventually we're going to see higher interest rates. I don't know when that's going to play out, but I believe in that story too. It's just when you have that relative to other things like German bonds, then I think the U.S. rates are a little bit too high, and maybe there's some juice there that you can kind of squeeze it out from that trade.
I was hoping to hear him go 4 for 4 in terms of agreeing with me on everything, or 5 for 5.
Yeah, you know what, Patrick? The only guy that'll do that is our buddy Alex Gurovich. That's the only guy that'll be good enough for you, buddy. Because if anyone,
I would love to hear the other part of it. What's your view? What's
God, you don't want to hear the other part of it. It's just a bunch of load of shit
Tavi,
it's just drivel. That's all it is, Tavi.
Well, listen,
drivel.
Tavi, we're going to Chicago. Both Kevin and I. We're going to be at the Chicago Trader Expo there, and we have John Netto who's going to moderate this bull bear debate. And we're going to be on there on stage doing this very debate. So I'm not going to waste all of my
That's
good
right. You're not going to waste your ammo. Patrick, if you're going to give the plug, you might as well give the full plug.
What's the remainder? Oh, and then of
July
course
21st. Make sure you sign up.
July 21st, and more importantly, what's more important than the
Yeah,
actual
that's
event?
right. Don't worry about
is
the
gonna
expo.
be,
Don't worry about the Trado Expo. But there is a Market Huddle event after
yeah,
that.
where all of our listeners are invited to meet us. We haven't announced the bar yet, have
No,
we?
we haven't.
We
But
haven't.
I have
We
a couple
saw.
of kind of suggestions. But we're gonna figure it out. You know what? And I think we're gonna make sure that it force feed you to drink some sours.
Oh yeah, that's gonna be
one
force
second.
fed. No,
Tavi's a young guy. Tavi, are you? May I ask? This might be too personal. Are you a millennial? Because you're a younger guy.
Yeah, I am a millennial. No, I'm 29 years old. So
Oh, you're a millennial. Great, awesome, great. Okay, so listen, Tavi,
yeah.
do you like sour beers?
I do. I enjoy
Yeah,
them.
see, I
I don't drink beer though much. I prefer whiskey, but I drink
Yeah.
beer
There's nothing
too.
wrong
But
with.
Something about these millennials and their sours. Like, you know what? I was just talking about how much I like the millennials. I think they're a great generation. But the one thing that I just cannot kind of wrap my arms around is their love of sours, because it's just a god awful beer, and yet we've yet to find one that is like that we've managed to have two of.
I have found sours that I drink now.
Seriously?
Yeah, you know what? Our sponsors have converted me.
It's
I
because they
have.
gave you. No. 1 second. Let's be honest here. Patrick just runs out of beer in the fridge, and he's like, "There's sours there. I better drink them." That's all that happened.
I mean that contributes to that, I'm not opposed to sours anymore, Kev.
Oh
I'm not.
God. Well,
I won't go and buy a 2-4 of sours and sit down and make it a sessionable day. But it's I do enjoy the sour every once in a while. Now.
but I didn't catch this. Is the sour beer kind of a new trend? I didn't know
yes,
that.
for
It's not-
sure, and it's something the millennials love drinking. It is a new trend, and the millennials love it. And it's
the Gen Xers like us, we're just used to like lagers and pilsners by the 2-4, and just
But we get all these sponsors, and they send us sours trying to convert us, and they sound like it's finally worked on Patrick, but it's going to be a long time for me before I like the sours. Like, you know what? It'll be a long time before the sours. Like I'm actually choosing one of those.
So sour beer and some avocado toast, I guess. That's a
you know
very
what?
millennial thing. Oh,
I like the
gosh.
avocado toast, and I like the
Man,
millennials.
I'm out on that. It's way too expensive. I just look at that
okay.
and I'm like, this is crazy. I mean, it's I don't know. But
They're
anyways,
not growing a lot of avocados in Denver for sure, where you're located. But I like the avocado toast, and I like a lot of the things the millennials do. But that is the one thing that I will have trouble doing. So, anyways, make sure everyone joins us. Market Huddle event after our great Bull Bear debate on July 21st. So that's it for the shameless plug. Let's talk some markets. How far do you think the gold's going to go, Tavi?
If you ask me, I think it's going to go at least 20 to 30% higher here. But especially I think a good way to look at that actually, that it's kind of my target here is looking at that long gold in CNY terms versus the global stocks ratio. And right now that ratio is at 4.3 or so. I think it's fair to say that this ratio could rise as much as, go all the way to 9 or 8. Once it gets all the way top to that part of it, I think that's when I'm going to be happy to unwind completely from that. But right now, I think gold has it's at the very early stages. Obviously, had a big move in the short term, and it's it could certainly see a pullback. For the last few years or so, we've had so many of those. Large sell-offs of whatever, if it's a conspiracy thing of whoever is selling $2 billion of contract of gold all of a sudden it's we're likely to see stuff like that again. Yeah, maybe, but I think gold is poised to go much higher here. I'm here on the long term. I'm here for 1 year or 2 year kind of trade of being long gold. And I think on the Real Vision, I did a presentation of, and I put out a target for GLD because it's just kind of easier to for retail investors to position that way. I think I said at 140. Right now it's at 130. So but I think it's going to go at least 30% higher from where it is today. But
okay, so Tavi, I'm going to shock you because I've said for a long time And this is Kevin speaking, not Patrick.
Yeah.
So everyone, just so they know, because you know what, Tavi, they say we sound the same with our Canadian accents and the slurry words from too many beers. But I think that we're going to have a period where I'm not saying we're for sure going to have this, but the possibility exists for us to have $1,000 in a week. And I know that seems crazy. That is how, like, I honestly think that if the central banks, like, if China comes for the gold, like, it is such a small market. I think people underestimate how much it could go if the central banks decide that is something they need to own. And I think people underestimate the possibility of that kind of outsized crazy move.
No, Kev, you've had too many beers.
No, I've said this for a long time, though, Patrick. It's not like this is a new thing for me to say. And I'm not saying it's for sure going to happen. I'm not saying it's going to happen today. But I do believe that if you look at how, Grant Williams has a great piece where he says it's called What If or something like that, where he talks about how small the gold market is compared to all the other asset classes and what would happen if if every portfolio manager just decided he was going to have 50 beeps of his portfolio in gold, his or her portfolio in gold.
I think the stat was, if correct me if I'm wrong, but something like the market capitalization of all gold miners is the same market cap as Cisco Systems.
Yeah, it's so small. It is such a small market, and I'm not trying to say that it's worth that and it's for sure going to go to that. I'm not like Eric Sprott or those guys who think there's no gold in Fort Knox and all that. I just believe that if they come for it, if we get a real rip-roaring bull market, that the possibility for that thing to go is way, way higher. Like, you look at palladium, and palladium got squeezed this last year, and it had some trouble, and it got the curve inverted, and it got the supplies got tight, and that thing doubled. Palladium doubled in a year. And this could happen in gold. And I think one of the things you should watch for is you should watch for the futures for the curve to start doing some funky things. And when that starts to happen and we start to see, the spreads between the months doing weird things and showing that the supply is tight, do not fade that. Do not say, oh, it's going to get fixed. At that point, it's when you want to double up and get even more bullish. Anyways, that's my 2 cents.
Well,
no, I'm
bullish, but not that bullish. But anyway, go on.
Yeah, no, I don't disagree necessarily with. I think gold could go parabolic. It's not. I don't think it's necessarily a wrong thesis, but the whole what is it called, the gold bug mentality is I subscribe to that mentality. I agree with it. I just for me is just that's kind of too much of a long term kind of play, and obviously hasn't worked for years, and everyone thinks that those people are crazy. But I agree with that. It's just I'm actually seeing a lot of signs on the short term here of why gold looks attractive, from the implied volatility, all these ratios versus U.S. stocks and so forth, and how even. This is even putting inflation on the side. I mean, that's kind of I guess a question for you. Like, how does that? Do you think gold could go that high without inflation at all? I mean, is that something?
Well, I think gold is more important is real rates, and when you look at the move that we had in, let's just look here, we had very little inflation from 2003 to 2011. Yet gold went from $280 to $1,800, and the reason that occurred was because real rates were low and to even negative. So everyone
and the U.S. dollar lost half of its value, right? Like the dollar index during the 2000 to 2007-8 period. Like, here, let me pull it up, just because
so
it
you're
was
right.
an influence.
You're right.
It was an influence, right? Like, this was the dollar trend,
you're
right? But rates were a big factor too. There's no doubt.
So I just think that the gold is more sensitive to real rates than it is to inflation. And everyone looks at 1970, like the late 70s, early 80s bull market, and says gold is correlated to inflation. Well, no, because the reality is we had rip-roaring inflation, but the real influence was the fact that rates were lower than inflation. So real rates were negative. And I think that real rates, and that's why I loved your TIPS 5-year yield chart, because I think that is one of the biggest drivers. So I look at it and say, do I see governments that are interested in having real rates high anytime soon? And I say no. And I think that we saw Powell trying his first of his, I legitimately think he wanted real rates high and he wanted to snuff the bubble. And the reality is that he got punished for it. So I just don't see governments anywhere having the stomach to sustain real rates being high, and therefore gold is going to go higher. And I think that if they get stupid with real rates, and if we do get a situation where inflation does take off and the Fed and other central banks don't chase up rates with them, then that will be what kind of institutes this kind of mad scramble for gold. And I think Grant Williams will be bang on in that. When all these guys or guys and girls, portfolio managers realize that they don't have nearly enough exposure to this, they could go parabolic. Anyways, I sound like I should get my tin hat out.
You should.
Yeah.
Yeah, I mean, if you look even this month, I mean, this is a research I was working on right before this podcast. I don't even know if I want to be able to share it correctly here, but let's see if I can, if I can share correctly. But anyways, it's if you look at gold move this month, which moved in a big positive way, I believe it's up 5 to 6% or so, maybe a little bit more than that. And for the whole month, right? So month to date performance. And then if you looked at equity markets, it's still up like 6 to 7%, I believe, month to date as well. And I'm looking at Dow Jones here just because it goes back further in history, and you can go back to the 1900s or so. And if you looked at, even though gold was pegged at some periods of those, and if you look back in history, how many times you had months, a month like that both of them rally at the same time. It only happened 4 times in history. So it's really rare actually to see both of them moving as much as they did this month. It's what we're seeing today is it's a real outlier. Which I think I always thought kind of that the biggest people would say, well, what if the Fed starts easing? How does that play out with your short equity play? And I always thought that precious metals would be the best hedge here. And it's kind of playing out that way. I'm not saying I didn't get things wrong either, but that was one part of it that I got it right, which is it's been playing out perfectly as a good hedge of the equity market moving up. It's been precious metals that are definitely kind of unleashing something that hasn't really done anything for years. So anyways, I think that what's happening this month especially is quite an outlier type of move, and I think we're likely to see a gold moving a lot higher.
Well, there you go. So Patrick and I are both long gold, just so you know, Tavi. So I think you should maybe be thinking about selling, because when the two of us agree on stuff, it never works.
What do you guys think about miners?
Well, we're Canadians, so we always love them. Like the reality is that Canadians are always like, oh, you know what? I got this little development play in up in the Yukon, and I'm gonna do it. So we're always bullish, don't you think, Patrick?
Yeah,
it's kind of in our blood. When you're born in Canada, they when you turn 16, they give you, instead of getting a car, you get some Vancouver stock certificates of the local miner.
Well, some of those guys are trading so you can find some gold miners trading at 5 times their reserves of gold reserves. Yeah. And if you think that it's gold's going to be trading much higher like you do, gosh, those guys are trading in really cheap levels here. So I don't know. Yeah. I think there's a lot of room for consolidation. I forgot the name of the guy. There's a really good presentation that I think not a lot of people watched, unfortunately, on Real Vision of this guy. I forgot his name now. I guess I'll send it over to you guys later. But of him talking about how the gold and silver mining stocks are, you're likely to see a lot of consolidation, and talked about a little bit of some of the stocks that he thinks are cheap as well in the whole industry. And it's a really good case. It's not a macro case at all. It's more of a micro and kind of an industry led kind of thought. But it's really interesting how, I agree 100%. I think those guys are in the real bear market for a long time and overdue for a move on the upside.
So, Mark Twain said it best. He says, a mine is a hole in the ground with a liar standing next to it.
Oh
And
gosh, I'm
and
sure there's a
often
lot of those.
too often that's a Canadian.
Oh
And
god.
we have one of our favorite guests is Cuppy, and it's Harris Kupperman, and he's gotten burned so often by Vancouver stock promoters that are like doing some things. He's like, I am never buying another Canadian venture stock exchange like stock again in my life. And so, anyways, Canadians have a long history of mines, and we seem to love it. And it's been a long time since there's been some excitement in the mining square. So it'd be nice to see it happen. I hope you're right. I hope you're right, Tavi. I
Well,
hope that those get going again.
the sketchy ones are the ones that have mines in Brazil.
That's right. That's even worse. Speaking of Brazil, I have long thought that they are the most lovely people. They're often so kind and stuff. I had a woman that worked with me, and she was Brazilian, and I thought that they were just the nicest, kindest people. And you've done nothing but kind of confirm that belief I have, in terms of my, belief of what the Brazilians are like. I remember one time that I think that Dennis Gartman said something about the fact that the two nicest people on the earth are Brazilians and Irish people.
Oh, that's a very nice compliment. I really appreciate that.
Yeah.
Yeah, I'm honored to hear
So,
that. That's really great. I hope we all
so,
keep doing
so,
that.
so Tavi, since we're on Brazil, here's the
Mhm.
index. What's
Yeah.
your call here? Is this a new bull breakout?
This is Ibovespa, right? Yeah.
Yeah.
I think that the Ibo, I don't buy Brazil
There we go.
as
No one ever trusts their own.
here.
That's right.
I mean,
It's just like us shitting on
That's
Canadians,
right.
right?
It's like home country bias in reverse. Like the professionals all think that it's the end of the world.
I think it looked like a total bear here, and I just want to make sure this is a tactical kind of play. It's not a perma bear by any means, but I just think that there's it's been kind of a delusional I don't know, kind of trade here in Brazil of people really thinking Brazil is it really shifted after the elections and so forth, and I don't think that I still think Brazil is, you can, one chart that is very interesting. You can look at industrial, just the industrial commodities index. I think Bloomberg has an index on that. And if you look at that versus the Ibovespa on a year over year basis, you can see that actually follows each other very closely. If you think that copper and so forth will be moving a lot lower, iron ore, and because of a slowdown globally, I think that Brazil is going to get caught up on that too. But Brazil and dollar, those are very different charts. If you look at EWZ and obviously Brazil, Ibovespa in local currency terms, it look very different. I
Yeah.
like the Brazilian. We have a small short position on EWZ, but I wish there was an easier way to short. There is a way, but I think that the shorting Brazilian stocks in local currency terms seems a little bit more attractive to me than in real in dollar terms like
So
EWZ. But
what's your call on Real on the
on the
currency?
real, I mean, I think the real has been Brazil has done a lot of easing policy. If you can look at the divergence between the interest rates in Brazil versus the Fed policy, interest rate policy, and you can see that Brazil has been easing significantly relative to that, and that kind of at one cost, right? So the obviously equity markets has been on fire. Things have been great there, but at one cost, the currency actually, just got completely demolished by that type of economic policy.
Yeah.
But I think that the real here is. I'm not bullish on the real, but I think it definitely had a big move on the downside. But it tends to, as you know, if you're a big believer that the Chinese currency is going to devalue, you would probably think that the real would follow the same pattern. But I think that the Chinese currency, the Hong Kong dollar, look a lot more attractive to short than the Brazilian real, given the move that he had. It's like shorting the Aussie dollar. I mean, just chart the Aussie dollar versus the interest rate differential of U.S. and Australia and then 10-year yields, and for like 5 years or plus, and actually all the way back to like 2000s or so, and you can see that given the interest rate differential, you would expect the Australian dollar to be trading even lower, break down from that base right now, and go down even lower. But I mean, it's just we're not doing that either. It's just kind of watching. I think there are better plays out there. They're still on the top, and one of them being obviously the Chinese currency and so forth. But
Okay. Well, Tavi, we're going to wrap it up here. It's been a pleasure having you. For those who want to learn more about your place, let's do it again. So tell them where your website and then your Twitter handle.
thanks, guys. It was fun. So my Twitter account is at Tavi Costa, and the website of the firm is crescat.net.
Well, thanks again. It was a blast getting to know you.
Yeah,
And
did you have a
learning
good time,
about yours.
Tavi? Did you have a good time?
Oh my gosh, I had a great time. This was
That's what
incredible. I loved it. Just really laid back. It was great. I loved it. Very cool.
All right.
Okay.
Oh, well, listen, Tavi, thanks for being on the show, and we'll have to have you back sometime for an update.
For sure. Thanks again, Tavi.
Absolutely. I'll be happy to be back. Thank you, guys.
Take care.
All right, cheers.